Hello everyone, welcome to this episode of Market Pulse. I'm Ajit Mahuli, the founder and mentor at Learn Price Action Trading. Let's take a look at what the indices have been doing and are likely to do in the coming week. So let's begin our analysis with Nifty. On the monthly chart, yet nothing has changed. We just moved up further in the same range. No new price pattern developed, still the same demand zone on the monthly chart. There is a big consolidation happening there. So these are level on top of each other. Yeah, that's a monthly demand zone. Prices are consolidating in a very narrow range, probably waiting for the Fed outcome or the budget and plus the earnings seasons is going on. So the trend is still up. We had a good sell-off last month. This month, more of range-bound activity. It's clearly visible here on the weekly chart. If you see after that big fall into this area of demand zone, after spiking out and faking a new high, the indecision is clearly visible on the weekly chart with so many indecision candles, and this week again is moving up. If the bullish strength is there intact, it should not waste so much time. So probably there is going to be a bigger leg fall down expected. But again, of course, after price gives us some confirmation, as of now, it is being resisted here by this weekly supply zone. And that's the weekly demand zone, which is still holding up. So that's a narrow range that the index is working. We may expect it to continue like this for the coming week, which is the expiry. Again, Thursday we have a holiday, so Wednesday is the expiry. So probably it might just end up like this. Friday and next week we could see some decisive move happening starting from Friday or probably early next week once the budget and Fed news is out. We probably could see a big direction on either side. But looking at the trend, it was a strong uptrend on the monthly, but weekly shows some weakness. Similarly, when we go on the daily chart, that's what is seen. So it's just range bound between this area of supply zone here on the daily chart and this area of again demand from where we gapped up and broke this year-long resistance. But the breakout of the new high failed and we came back immediately here. And if this had more orders or more strength, we should not have been able to have such a kind of resistance from prices here, which shows that sellers are also pretty active here, even though buyers are also active. In a trending market, usually these price actions are not visible. Price should easily go up. I mean, maybe price should have gone from here itself. But while coming down daily, we broke quite a few demand zones. And again, the main supply here on the daily starts at this point. So level stacked. But once we break this, or maybe we can have this as an extended demand zone here on the daily chart. Once we break these two, the path is clear up to at least 16,800 to 17,000. That is the range. So more range-bound activities may be good for some option traders who do weekly options. Those who are in swing shorts, if your swing shorts are here, you might continue holding, but new shorts only at these areas or on confirmation right now, it's only maybe more like an intraday trade that you can do. Once it comes here, buy. Once it comes here, you can sell. And that is also what is seen on the smaller time frame chart. Those are the areas which have not been able to surpass. And after that decisive move, which happened a couple of days back, everybody probably thought that this might just start moving up, but it could not get more strength to go up all the way here. So we'll have to wait and watch to see how this price action, that's a smaller time frame demand zone. The price action has to evolve more. Right now, that's the only thing that we can trade. That is between 18,000 to 8,300 to 17,800. That's the range. So good for intraday trading. Swing trading will need to wait. Taking a quick look at Bank Nifty now. Again, pretty much similar to Nifty, but this is much more stronger as compared to Nifty, in the sense Nifty last month did have a very big red candle. This year there was buying that happened, and we are still sustaining around those areas. Trend is strong and up. Maybe smaller time frame demand zone years, but that's the main demand zone, which is where if it comes in, you can just buy for swing or cash trading. The area is here. Right now we are extended, and there could be a possibility of us if it slide down. That can go all the way up to maybe this area of demand zone. That's a weekly demand zone, which has been significant. So Bank Nifty does have enough room to go down. Remember, the risk to reward on a long trade is very, very less as compared to a short trade. But we cannot short immediately without, unless you have shorted somewhere here, unless we get some more confirmation. So maybe options play might not be a bad idea if you are good at trading options. That's a weekly supply zone, which we have. This is very, very bad price action, which also suggests that maybe we could see a big fall coming in the next couple of weeks. And once we come back here again with big red candles like this, I think we can easily break and move towards 40,000. That's going to be the next target. So again, range bound movement on Bank Nifty. Daily, if you see this, this is the area of demand zone from where prices are moving up. Again, no great demand zone. The only quality of this attribute of this demand zone is it broke the all-time high. But after breaking the all-time high, the move that happened here is not really great. It doesn't say that this demand zone is likely to hold and give a new high. Probably the more this consolidates, the more chances that it might come down to a better level of demand zone around 40,000. So again, range bound movement on Bank Nifty, and on smaller time frames, if you see, that's what is holding Bank Nifty here. Some supply zone on smaller time frames in these areas. And that's the area of demand zone, the gap up area similar to Nifty, which is holding. So again, be careful. It's a range bound movement. High on the curve, you can do some short-term income shorts like intraday or a couple of days play. And once we come here again, you can look at buying on confirmation for this. So it's a pretty good range for day trading, but not always you might get the RR during a day trade. It's only when you are able to get into it on a right location is when you should be able to see good reward to risk ratio. So patience is needed for the index to give some more room, but there are many stock specific plays that you can go. A quick look at India VIX. Now India VIX is also around 14. The low part, volatilities are low, but looking at the index supply demand picture and this supply demand picture, there is a good chance that we may still continue doing this till the index has a decisive move. But this is low on the curve and has good chances to move up on the price chart. So a sideways approach, a sideways directional bias on both Nifty, Bank Nifty. It's a monthly expiry week this week, so trade cautiously, and better to be on the intraday side if you're not in any swing positions.